I can't believe it. It finally happened. I got to meet Uncle Dave. Dave Ramsey is the man who tells you to live below your means, to eat your rice and beans.
You are on beans and rice and beans. No vacation. You will not see the light of day. You will work like an animal.
And after years and years of pretending to talk to him on my videos, I was invited to come meet him in Nashville. And when I say I was invited, I mean I invited myself. And while I was there, I also tried to give him some Bitcoin. What if I gave you a Bitcoin? He also took me behind the scenes of his several $100 million empire. I got to ask him your most popular questions about investing, real estate, credit cards, and the current state of the market, and why he is the way he is. I also asked him to look at my portfolio to give me some advice, and here's how it went. I feel like it's more than I deserve. Do you think back when you were in your 20s, was it easier to buy a house than it is today?
Mathematically, wages have not kept up with house prices, so mathematically it wouldn't have been easier. But it has always been a strain. Mm-hmm. It's always been. You go back pre-1960, pre-1955, before FHA, VA, conventional, before standardized mortgages, when you just had to go to your local banker and talk him into it. The down payments were massive, and usually couples didn't buy a home back in those days until they were in their 30s or 40s. But the advent of stuff like FHA or VA with nothing down or almost nothing down, and 5% down on a Fannie Mae even, then it became normalized in the 60s, 70s, 80s that everyone ought to get a house. You got to get a house. 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 And we had first-time home buyer programs that have evolved over the decades and all that, because it's always been difficult with your first job out of school to afford a house. But it's hard right now. It's really legitimately hard. And what you've got to do, though, is I think, and I know folks have a Dave Ramsey stereotype or whatever, but it doesn't matter what they think. But the reality is that just because you are frustrated, you don't get a pass on math. Just because you feel like the whole thing's rigged against you, you don't get a pass on math. You don't want to sign yourself up and punish yourself as a way of showing the man. I mean, come on.
Right.
You buy a house you can't afford, that's punishing yourself. You're going to set yourself back a decade. And so what we tell folks is just there's a couple of variables here that you got to look at where you live. I mean, first-time home buyers in Los Angeles, in Manhattan, in their 20s have never been a thing. You've never been able to afford those markets. You also can't afford to live in Tokyo or London, some of the most expensive cities in the world. Paris, the most expensive cities in the world. And some of them are in the United States, So you can't just go, well, I'm going to live in L.A. and I should be able to buy a house. No, you never have been able to, ever, in the history of housing. So you have to look at where you're living, because you don't get a pass on math because you want to live in a certain place. And then you've got to look at give yourself a little bit of patience. Breathe a little bit. I mean, have a 36-month plan instead of a 3-month plan. And then as a part of that, do look at your income. But I was being interviewed by a lady the other day on NPR, and she said she'd talked to a guy whose daughter was working in a coffee shop, and she was a dancer in a show in downtown Nashville, one of the country shows. And she couldn't afford a house. And I'm like, well, in the history of man, working in a coffee shop and being a dancer in a country music band has never been able to afford a house.
What about the people that say back in the 70s you could get a job out of high school, and back then the price to income ratio was closer to 3, and maybe nowadays the average is 5 to 6?
Yeah, that's true. That's true. Out of high school, but also then the other opportunities weren't there. And we've got the wonderful opportunities in the marketplace today that digital everything affords you. And so you just got to choose a career path. You can't say, I'm going to be a starving artist, I'm going to be a barista, and buy a house. It doesn't work mathematically. So you've got to choose. And, I'm meeting lots and lots and lots of Gen Zers that are making serious money, and they're very serious about their lives, and they've done a great job, and many of them even paid off their home in their mid-20s. But what are they doing? Well, they're buying a home in an affordable area. They're buying an affordable home, not a McMansion, and they're working their tails off, and they picked a career field that enables them to make some money. And so that's how they won. I didn't dictate this. I didn't make the rules, but you still have to be able to pay the freaking payment.
Mm-hmm. Dane's grandmother, there's a great place to go when you're broke. To work. That's a great, you can tell they're cut from the same cloth. Man, I mean, this is a very Dave quote. If you do poor people stuff, you'll be poor. If you do rich people stuff, you'll be rich.
Right.
It's so simple and powerful at the same time.
If you aim at nothing, you'll hit it every time.
So this is as you enter. We kind of made this a fan experience. We wanted people to walk in and for it to be about them, not us.
Yeah.
And so as you walk in, we've got the lobby. You're greeted by, Janelle, who's one of my favorite people in the world. You see the whole stage here. You get the debt-free stage. This is the pinnacle.
That chandelier is cool.
The chandelier, if you notice, has tiny microphones. So when we started doing the show years ago, Dave started doing this debt-free screen.
Yeah.
Call in the show. They share their debt-free journey. And they were just standing in the hallway. And so when we built this new building, he was like, I want a stage where people can stand and we celebrate them as they talk through the glass. So there's Dave getting ready for the show right there. And so people stand right here with the headsets on. You've probably seen it on YouTube, and they'll talk about, and at the same time, we come out here twice an hour, whoever's hosting the show, and we'll do pictures and sign books with whoever's visiting.
Right here.
Yeah.
That's cool.
Is it fair to say you absolutely hate credit cards?
I hate what they do to people, so then I end up hating them.
So
I hate car loans and car leases, too.
You have no
what,
credit cards?
I don't. I have 4 pieces of plastic in my pocket. My debit card on my business, my debit card on my personal, my driver's license, and my handgun carry permit. That is the only plastic I have in my pocket.
Wow. Okay. But would you ever make a case for responsible use of a credit card?
No. A debit card will do everything credit card will do.
Like consumer protections?
Yep.
And what about building your credit score?
Why do you need a credit score?
To buy a house?
You can buy one without a credit score.
Most people can't. You can.
Yeah, they can. Anybody can. If you have 0 credit score, you can do manual underwriting.
Wouldn't that interest rate be much higher, though?
No, same exact.
Okay.
George Camel, Ramsey Personality, bought one 4 years ago. Manual underwriting with Churchill Mortgage, one of our advertisers.
Yeah.
They do it all the time because we tell people not. But you can't have a low credit score. You got to have a no credit score.
Oh, okay. I have to ask this question. I know you got this recently, but people are asking to clarify the 10% return assumptions. Because my assumption was it was 6 to 8% or 4% safe withdrawal rate.
You're talking about a withdrawal rate,
yes.
or are you talking about rates of return?
Well, both, right? So
the S&P has averaged 11.2 since its inception.
So what is a safe withdrawal rate?
Well, so if it's averaged 11.2 since its inception, why would 10 be a problem?
Do you think it'll continue being that way, though?
Sure.
Yeah.
Sure.
Okay.
Yeah. I mean, I own one mutual fund that's got a 12.1, and it's 80 years old.
Right.
Average annual for 80 years. And in the last 20 years, it's done excellent.
Well, why were people giving you grief about the 8% withdrawal rate?
Because the standard crap in the world of economics, the stuff we're taught in college is 4%, 4%, 4%. The stuff they teach you when you're working on your CFP, 4%, 4%, 4%, 4%, which if you pull 4% and you can live on that, that's fine. I don't care. You don't have to. But and it's the whole point is this. It never ends up, you never end up exactly where you were planning to end up anyway. Okay, you say, okay, I need $1 million because at 8%, that's $80,000 a year, and I can live on that in the future. Okay, or I need $2 million because at 8%, that's $160,000. But you never end up with $2 million. You always end up with less or more. And so you end up dealing with reality. And here's the thing, though: you're never going to make 12. You're going to make 16, or you're going to make 6.
Right.
Okay? And so that's how the reality is. So none of this is all theory that somebody's sitting with their calculator in their mother's basement trying to figure this out. Screw it. Start saving money and use whatever assumptions you want to use that cause you to get off your butt and cause you to save money. The people that invest are the ones that end up with money. That's the math. And so, if you don't like Dave Ramsey's assumptions, who cares?
Right.
Go do your own. But for God's sakes, do it.
Yeah. I like that. So 3% is probably too conservative. Okay.
Well, I mean, not if you're making 7.
Right.
And the inflation's 4, okay? But so what have you got it invested in? I've got my mutual fund portfolio averages, not every year, has averaged for decades more than 12%. And I'm not a rocket surgeon.
What do you think of dividend stocks? Because
They're fine.
I'm a huge dividend investor. I love dividends. I love blue chip,
I think
boring dividends.
Blue chip is a great, certainly to have in the portfolio. I mean, we teach growth and income, aggressive growth, and international is the 4 to split it across, and that's what I personally do. But, you know, if you want to sit heavy in that growth and income, you're going to get those blue chips in there, and there'll be a bunch of dividends in there, and that's a sweet play. It's a very predictable, risk-averse play.
Yeah.
And because the companies are very solid,
Right.
old dinosaur, they don't move fast. They're not going to spike up, but they're also not going to spike down most of the time. I mean, so it's a good play.
This is where it all started. This is the actual copy of the document of Dave's bankruptcy. David Lawrence Ramsey III did, in fact, go through bankruptcy back in '88, and here we are years later. And it's, you know, we don't celebrate the pain and suffering, but we celebrate the fact that there was so much transformation that happened because of that moment. So, and a lot of people have that moment, you know, the turnaround moment, the I've had it moment, and it shows people that it doesn't matter where you start, that you can still change and there's hope for you yet. So I think that's why people relate to Dave.
So out of all of Dave's advice, my favorite one is baby step number 4, which is to invest 15% of your household income towards retirement. Now, it was at this point in the video, I showed him my portfolio, but before I share that with you, I want to quickly mention the sponsor of today's video, Moomoo. Moomoo is a one-stop trading app available for users in the United States, Canada, and Australia. So if you're just starting out and you don't have a lot of money, Moomoo offers fractional shares, making investing more accessible. Because rather than buying an entire stock, you can now buy a portion of a share and invest as little as $5 into companies like Nvidia, unlocking opportunities that before were considered too expensive. But what really sets Moomoo apart is its unparalleled affordability compared to other brokerage apps. And here's how they stack up against the competition with some of the lowest rates compared to everyone else. The app prides itself on transparency with no hidden fees, real-time options chain without subscription fees, and professional features available at no extra cost. And of course, the best part is that you can get up to 10 fractional shares made up of the Magnificent Seven, which are stocks like Nvidia, Apple, Amazon, Meta, and more, when you complete your first $100 deposit and you maintain your average asset balance for 60 days. This is a limited time exclusive bonus that ends on May 28th, so make sure you use the link down below to receive it. Of course, terms and conditions apply. They're also offering cash sweep, which is 5.1% APY on uninvested cash, but rates are subject to change, so please check out the disclosures for the latest data. Don't forget to use the link down below. Thank you, Moomoo, for sponsoring this segment of the video, and now let's get back to it. Assuming that you were in your 20s, how would you start all over again? What job would you get?
You know, I've worked for myself my whole life, just about. I think I've had a real job just a short period of time in my early. Like, I got out of college, I worked for a guy for 6 months. I worked for another one for a year, and then I sold real estate for a company. But that was straight commission. I've either been straight commission or self-employed my whole life, virtually. And I would do something like that for sure. I'd find something in the marketplace that I enjoyed the process and the model, and that I could scale. And I think today, the beautiful thing about the digital world that you and I live in, you know, with all this stuff, is that you can do stuff fast. Mm-hmm. It's pretty quick. You can hockey stick some stuff, man, up and to the right, man. And you're proof of that. I mean, you're a big star. It's pretty amazing.
I wish.
But no, you are. You got serious numbers, man. I'm proud of you. Well done.
Thank you. I actually do want to ask you to rate my portfolio, if you're okay with that. I don't have like all the individual stocks.
Okay.
I just want to give you a breakdown of my situation.
Okay.
So you can kind of look at it.
All right. I don't know why you need me to rate it. I think you're probably the guy that should be rating it. But.
No, yeah. I'd love for you to criticize it. You could tear it
No,
apart
I'm not going to
and say,
criticize.
well, I know you're going to criticize at least one part.
Okay.
And I'd love to talk to you about it.
What's miscellaneous?
Collectibles, things like...
Most of that number in crypto, though?
Yes.
Okay.
Specifically one. Dave's my financial advisor right now. He's auditing me.
Wow, you have done amazing. Congratulations, dude.
Thank you.
Very well done, man. I knew you were killing it, but this is great.
Thank you.
Way to go, man. You're in great shape. And the stocks are single stocks?
Mostly S&P.
Okay. All right. So you're sitting like I was talking about then.
Yeah, half S&P, half blue chips.
Yeah, because you're holding to those dividends you were talking about. I mean, you amazing.
Well, what do I need to do differently? Should I sell my crypto?
Oh, sure. You know I don't. You know that. I mean, Dave's not ever going to tell you to do crypto. And the reason is not because I'm stupid boomer that doesn't understand crypto. Sure, That's not it at all. Where I think people get confused, and they have on this subject for sure, the subject of gold also, is we confuse our terms and use the wrong word. Okay, there is speculation, and speculation is for short-term gain. Okay, I'm day trading stock. I'm buying a currency. I'm buying gold. Because if you were buying gold for the long term, you would look at its 100-year track record of 2%, and you would never buy it. So you're speculating. Flip this house. You're speculating.
Spec homes.
You're buying. It's called a spec home.
Right.
So you're speculating. That is not investing. Investing is always, by definition, long term. And you would never invest long term in something that has a crummy or non-existent long-term track record. Because by definition, if it doesn't have a long-term track record, you are speculating. You're guessing. And so when you say my investment portfolio, it should not include speculation. You could say, I've got my investment portfolio, and then I'm doing this thing on the side, I'm flipping houses. But flipping houses is not a portfolio.
Well, I guess when I look at investing, I look at it on a spectrum. Like if Bitcoin was here, right? Or rather, if scams were on this end of the spectrum and treasury bonds were on this side of the spectrum, all investing is a form of speculation. So you have the S&P somewhere closer to...
Speculation, by definition, is short-term.
But couldn't you hold on to Bitcoin for the long term? Like there have been people that have held
You could
it for
hold
over
on to
10
it for
years.
the long term, but you have no reason to believe, based on history, because it doesn't have one,
Right.
that you're going to win.
Right.
Except just your assumption that because it's digital and it's cool, and the cool kids are doing it. But the people that are getting in it are getting in it based on greed. They're not basing it on long term. I have analyzed this investment with my calculator, and I am looking into the future. And I can see, that's known as a guess.
Right. Have you ever studied the technicals of Bitcoin at all? Like, have you read the white paper or understood like how it works?
Sure.
In any way?
Yeah. I mean, I've not gone into nowhere near like you have. I'm sure. You're probably much more of an expert on it than I. But it just falls into a category. The technicals won't change it for me. Okay. So if you had, it'd be the same thing of a new tech company blows up. They go from venture capital. They're going to take it public. They're going to do an IPO. Am I putting money in that? No. When Facebook went public, did I put money in it? No, not a dime, because that's betting on the short term. Now, you look back 10 years, has Facebook done okay? I don't know. I don't follow their stock, but probably could have been okay. I may have missed out. But I don't play short game. I play long ball. That's investing. And so once you put it in that category, I just don't do it. Right. I don't have to go into the technicals. Right. Because I'm not going to play.
I'm just trying to find the missing link between who you are as a person, because I agree with everything you say. And I'm like, how do I still agree and believe in Bitcoin? Because I'm not a short-term investor. I'm holding it for the long term.
How do you explain that that's a long-term investment?
Because it's governed by code, right? There's nothing you can change about it. It's not some mystery of speculation. Everything
but it is a currency.
It is a commodity.
It is a currency.
It's not a currency.
Well, a commodity. So commodity prices are driven by one thing: supply demand.
Right.
That's all.
Yes.
You can't write the technical white paper on that.
No, you can't. But
if everybody suddenly abandons Bitcoin, your Bitcoin's going to be worth air.
Sure.
If everybody comes after Bitcoin, like a Baptist after a casserole, your Bitcoin's going to go through the roof.
That's fair.
You are not in control of that. You cannot predict that with a white paper or technicals.
True, but I feel like you can say that about anything, whether it's a particular stock or the stock market, bonds. People can abandon that in lieu of something else.
They could, but they don't have a history. The difference here is you don't have a history. The technicals are based on what they hope, wish, think. But so's the IPO.
This year, actually, in April, Bitcoin became more scarce by supply than gold in terms of the...
Yeah, but last year in April, it wasn't. So
but
you're
I'm trying, guys.
Hey,
I
think you're a genius. I think you've done a great job with the portfolio. Would I do that? I think we have the question answered. I would not do that, and that's why.
To be fair, I'm not here to convince anyone. I just love to get Dave's perspective, because to be honest, I think $1 trillion asset like Bitcoin will do its thing regardless of whether I speak about it or not. I have no influence over it.
And same here.
Yeah.
I don't think Bitcoin's going to fail because Dave Ramsey said don't do it.
Right.
What I'm worried about is that guy, who should be putting money in his 401k. He should have paid off his car.
Right.
He should have gotten rid of his student loan. He should be thinking long term. He should be getting his house paid off. And instead, he's freaking putting money in this stuff. That's absurd.
Right. That's a fair point. I would agree with that. There's other priorities.
He's who I worry about.
Yeah.
I don't worry about you and me. If you lost in that portfolio, if you lost 100% of your Bitcoin, you're okay.
Right.
You're still a multimillionaire.
Sure.
You're still incredible portfolio. So, this becomes a theoretical argument at that point.
Right. What if I gave you a Bitcoin? Would you take it or would you not accept it?
Well, it would be pretty hypocritical. as much as I have trashed the idea publicly since it became a thing.
How could you say no?
I could easily say no.
Okay.
What if you gave me a free credit card? I could say no. But would it kill me? No, it wouldn't kill me. But
you wouldn't accept it, even if I offered one.
No.
Wow.
It would be hypocritical.
I mean,
how can I do that with integrity? And tell everybody not to do it. But for me, I could take it. No.
You can donate it.
Okay, I'll donate back to you. We're good.
Okay, that's
We're good.
fair. I tried. Okay.
So this is the car that is the replica of the one Dave started this place from. Like, he started selling copies of his book, Financial Peace, out of the trunk of this exact model car. And so because of Dave's humble beginnings, we wanted to have this as sort of a spot in the lobby. So we actually cut the car in half. We got all the electrical parts working on it, and now we use it to display books for fun. So we have an outside staff. They don't work for us. They're corporate chef employees that run the entire cafeteria. So those aren't Ramsey employees, but we see them like our team. We interface with these people every day, the people working in the cafeteria, and so we know them by name. So we have all the books that we've released, and there's probably many more on here, and some of the awards and YouTube stuff, some relics from the past, the shows that we launched, and so now we have a whole network of shows on top of the Ramsey show, including my show, Ken Coleman's show, and then we have a Tell Your Story booth, which is fun because we realize we want to make the people the hero, not us, the guide. So if they want to share their story there on camera, they can be like, hey, here's my deal. I was in debt and I paid off my debt. Here's how you guys impacted us, and it's cool. And then this is just photos of, Dave and Snoop Dogg and just random hilarity, the presidents and just fun moments.
I wanted to take you to one of the darker times in your life, when you declared bankruptcy. Did you feel like you failed personally?
I knew I failed. I didn't just feel like it. I did. It destroyed me. Because I grew up in a hard-driving entrepreneurial household, and I had a toxic view of success at that time. As a young guy, I was an arrogant little twerp. And so being successful financially, being successful in business was my identity. And so I didn't just lose the money. I lost me in the process. I lost my identity. And so I didn't just simply go broke. It wasn't just a monopoly game I lost. It was an internal existential crisis. And so, I not only went broke, I was broken. And I was overly confident before, and after that, it shattered my confidence. I didn't have any swagger left at all. It's 2.5 years of hell we went through, losing property after property and getting foreclosed on, getting sued so many times. And they were all right. It was all default judgments,
Now, if you'd like to see the rest of this video, it's actually over an hour long. You can find it on my podcast channel with my co-host Dylan. It's already uploaded, so go check it out, subscribe or not. It's a really cool video that I think is way more interesting than this one because you really get to know Dave as a person and you see his vulnerable side. But as always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks. Links are down below. Go track them automatically with the spreadsheet link down below in my Patreon. Thank you so much for watching. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon. Bye-bye.